Well, good afternoon. Happy Friday, December 17th. Mark Milam here, your mortgage professional with Highland Mortgage, coming to you with this week's interest rate summary and market update. So, yet another interesting week in the world of mortgage interest rates. We started out the week with another high inflation reading, the CPI Consumer Price Index coming in, I think it was 6.8, one of the highest readings we've had in the past 40 years. Inflation just remaining such a persistent problem, whether it's supply chain issues or you want to talk about a little bit of corporate profit taking, whatever the cause, the Fed has got to get inflation under control. How do they do that? Well, it's really a two-step process. First of all, they have to stop buying mortgage-backed securities and treasuries, and they've speeded up the tapering of those purchase programs. This was announced on Wednesday of this week. The Fed also announcing they're looking at 3 potential Fed funds rate hikes in 2022. That is an increase from what the initial expectation was. So the Fed doing all they can to slow the rate of inflation down. Is it a little bit too little, too late? Probably not. There's probably still some ephemeral qualities to inflation. The supply chain issues are taking much longer to unwind than anybody thought. But it will be interesting to watch as spring unfolds and as those Fed funds rate increases do come, what happens with those inflation numbers. Now, why are mortgage interest rates not really spiking in light of this news? Good question. And the first one's easier to understand. First of all, the Omicron variant, I'll flip the screen around here. We'll talk about the Omicron variant, just continues to be, looks like an incredibly contagious variant of the COVID-19 virus. We're seeing news that France is starting to lock down travel from the UK. The UK really dealing with, I think, the third highest infection rate. 3 days in a row, they've broken the record on infection rates from the COVID-19 virus, the Omicron variant being the culprit there. And news from the CDC that they soon expect almost all cases of the COVID-19 virus infections to be the Omicron variant here in the United States, with just cases popping up in really pretty much every state, every major metropolitan area. That in and of itself is a concern, though the variant doesn't appear to be any more lethal than any of the other variants. Still a concern on how incredibly contagious it is. And really, the news of these potential Fed funds rate hikes is also impacting the stock market. You notice the Dow is poised to have a losing week. We're down 500 points so far today. And really what this is a lot of investors looking at growth stocks and thinking, with rising interest rates, with the Fed now taking this action, maybe growth stocks not the place for me to be investing our money. And what an odd thing that the Fed announcing Fed funds rate increases actually pushes money out of stocks, maybe back into bonds, and we see mortgage rates actually improve a little bit from where they were this time last week. It's a very, very interesting dynamic that's happening between the Fed, the stock market, and the bond market right now. We'll keep you updated on that as it progresses. Have a wonderful weekend. If I can be of any service to you, don't hesitate to reach out, mark.milam@highlandmtg.com.